All right, welcome to the Executive Edge episode with Robert Stewart, U.S. veteran. Thank you for your service, Robert, from CREquity AI. And Robert, you're in the lending space. You're on the cutting edge of technology. You also do some real estate there. So tell us a little bit about CR Equity. How they're helping small businesses, what you're doing in the lending and the technology space, and kind of what got you into it and where we're at right now.
Christian, first and foremost, I wanted to thank you for bringing us on the show. And yeah, I'm Rob Stewart. I'm the CEO and founder of CREquity AI. Christian, I want you to kind of think of CREquity as kind of the apex between technology and providing clients with liquidity. So this kind of started as believe it or not, a challenge that we were trying to address internally. I got into real estate when I was active duty. I got my real estate license going on over a decade ago now, almost 12 years. And I just kind of picked it up to kind of earn a little extra money while working in and out of the military, and found myself to kind of be that authority or trusted advisor when people were coming in and off of post. We're moving in and out of the area. We need recommendations. And I had a mentor one day says, man, you should go and apply, get a real estate license, and you can get referrals for that. Had no idea what that would lead to. Since that time, I mean, I've owned and operated my own small investment houses, rentals, and everything else. And then shortly after COVID, I had a son. I never been a father before. And my dream of kind of retiring early and traveling the world and, in an RV and all that kind of stuff kind of went out the window, and I needed to earn extra money. During that time, real estate was crazy, and we needed to kind of figure out a way to underwrite deals in real time, right? And that's kind of where CREquity, I would say, 0.01 version got started. I started off with kind of an XLS spreadsheet and a little Java application internally where we would structure underwriting criteria for myself. I did private mortgages at that point and was selling real estate, so I kind of did both sides of the house, where I would be a real estate agent on investment properties, and then people would come to me for financing on the second side of it, and I would structure deals. And internally, I would just spend all this amount of time, right? All the paperwork, and finally get to a decline of a loan decision. So CREquity really was started to allow me to get through that paperwork quicker. Fast forward 4.5 years later, right? We become an Inc. 5000 company. Now we're a Veteran 100 company. As a result of that, have underwritten, both non-qualified mortgages and private equity deals. And currently have an AI driven blockchain immutable ledger type of backend security platform, which allows you, me, family member, savvy investor, whoever is in that funnel to have the same user experience. So what we've done, Christian, is we've taken a very rote, extended process in underwriting, which typically takes anywhere from 45 to 90 business days. We've truncated that down utilizing AI and automation to roughly a little bit over a week to a week and a half of time to fund a deal.
Wow, that's awesome. So talk to us a little bit about, who your clientele is, right? Is it the first time home buyer? Is it, the person who has rental properties, the investor? Is it residential, commercial? Who is that person you're trying to get in front of and kind of make the process more seamless for? Or maybe is it all of the above?
It's actually D, all the above. So what we have noticed, Christian, and what the numbers have told us, believe it or not, there's $38 trillion per annum that transacts in the private real estate market, right? Believe in a lot of folks believe that goes through the doors of Bank of America, Wells Fargo, and JP Morgan. The fact of the matter is about 97% of transactions that happen, in real estate are non-institutional grade type of transactions. That is a private equity and private capital and private credit market. That's the reason why you have large hedge funds, family offices, life insurance companies, and various different private lenders that have they have a successful business, because 9.5 people out of 10 don't qualify to walk into Bank of America and get a investment property loan. So Why is that? That's because credit risk. So when you go to a top tier 25 institution, Bank of America, Wells Fargo, JP Morgan Chase, any of the guys on the corner, right? And you say, hey, Christian, I want to get a $1.5 million fix and flip loan for a rental for a duplex in San Diego, California, or $800,000 for Dallas, Texas, or wherever, right? The first thing they're going to do is they're going to look at you as a person. They're going to see, okay, what's your credit score? So you're going to personally guarantor that. The second thing they're going to look at your balance sheet and then what assets you have in their bank, in their institution. If both of those are not where the least possible risk, 700 or better, and a minimum of 30 to 40% liquidity of the amount that you're asking for that's visible, that's an automatic decline. You're not going to go. It's like, do not pass go. Do not collect $200. You don't even get to go and see the flop if you're playing Texas Hold'em. You don't even get to see the turn card, right? They just cut you off. So what we've done, what we said is said, hey, look, we have the same underwriting criteria, but how do we structure a deal that allows Christian or what we like to call the person who's looking for that independent wealth, chasing their dream, to realize it? Because believe it or not, 95% of the people that get in the real estate game are not stupid. They're not unsavvy people. They just have a W-2 because they weren't born with a silver spoon in their mouth or some windfall of cash that allows them to start off as real estate investors when they're young, right? They're your mom and pop who have for example, we do a lot with folks that have land or they have a single family, and they'll call and say, hey, Rob, you know what? We've got this 1.5 acre parcel. We're really only using half of it. We would like to put a duplex on the other side of it, or we would like to build a 4-unit multifamily, get some some additional rental income. A lot of banks and traditional institutions wouldn't even look at that because of the fact that that's considered a primary initial, your castle, if you will. And they would just say, you know what, go ahead and get it shovel ready, go get the land bifurcated, come to us when you get that done, and then we'll give you a construction loan at 55% LTV. That's a lot for a person that's never done this before, right? So what we do is we say, hey, look, we can't do primary mortgages. We don't do that. We do non-owner occupied, non-qualifying mortgages. So we don't do FHA, we don't do VA, we don't do conventional. If you're not Rocket Mortgage or Wells Fargo and you get in that space, you're going to get crushed, because they own 95% of the market share. So there's no, you got folks that broker with those guys. Like there's a lot of mortgage loan brokers that broker, but as far as like being a direct lender in that space, unless you're getting ready to go buy Rocket Mortgage or Quicken, that's not something you do. So we don't do that, right? What we do is strictly investment, which when that person comes to us, that mom or pop that has had a successful business or a successful career, and they're looking to get in the real estate game or create passive income, right? We take a look at the deal itself. We look at the individual, right? And we say, okay, what are they trying to accomplish? They want to do a fix and flip. Maybe they're not the person that's actually, swinging the hammer to do the renovation, but they've contracted with Christian, who has been doing fix and flip modifications for 35 years, right, in that area, and knows the market and whatever. So we really try to put the borrower in position utilizing technology, right? Utilizing data. And that sets us apart from all your other lenders, is that where other people say no based on the initial passing of an application, person doesn't qualify on paper. That may be true, right? That may be true that when you first take a look at it, man, this guy has a 650 credit score and, he doesn't really have a lot of liquidity. But I'm going to tell you right now, Christian, depending on what day of the month you look at my FICO can range anywhere from a 750 to a 690 between the 1st and the 18th, because I'm a business owner. And depending on what day of the month it is, there may be some outstanding debts and credit. And what I'm getting at is that we go, because we have access to AI, right, and automation and deep machine learning, we look at the totality of the circumstances, which means, going back to my example with the client who is our typical client, $800,000 to $1.2 million of loan type, 650 to 680 credit score, what we call the blue belt of America, the normal investor, right? The guy and girl who has a W-2, got 50 to 100 grand liquid, looking to get a fix and flip for 300 to 400,000, trying to get in their first or second or third deal or whatever not. That's our client. Our client is the people that typically are going to get turned away at Bank of America, right? Or in the top tier organizations. And the reason why we look at that is we're going to a place where nobody else wants to go because we're making deals happen utilizing transparency and data. We're not taking any more calculated risk. We're just structuring a deal utilizing transparency by data analysis that allows us to structure and put deals together that nobody else will look at because they don't want to expend the time and the effort to do it. They make so much money by bringing you in this funnel. And if you fit, great, right? If you don't, that's for the other guy, right? But because the fact we have data and we have AI, we're able to bring a lot more people in that funnel and reduce risk because we can look at data that your normal paperwork doesn't show you, right? Trend analysis, standard deviation on rental analysis, looking at historical analysis of how somebody's performed or what a region or area is, or there's just a lot of information that we have at our fingertips based on APIs and various different public sources that are within the software that your typical bank doesn't even care about, doesn't even look at.
Sure. So you guys essentially you're underwriting the deal as a holistic thing, right? You're not just looking at the person with tunnel vision and saying, okay, it's either A or B. There's definitely gray in the middle of that.
Right. Christian, have you ever applied for a loan and you get a term sheet and you say, man, these terms are great. Or maybe you got a loan and you saw the terms, you're like, man, these terms suck, right?
Yeah.
Well, unlike those engagements that you have with a bank, right? They're going to say, hey, look, here's our terms. Take a look at that. And if it makes sense, let's go ahead and you accept them and then we do underwriting, right? We don't do that. Our software allows us to give you a term sheet. And while it's not legally binding because we haven't had an engagement yet, whatever you see on that paper is the most conservative and worst case it's going to get. Basically, in our disclosure statement at the bottom of the term sheet, it says, look, provided that everything that you've given us thus far, the 12 questions you've answered, right, and the data that we access to verify that, as long as it's between this line, the minimum and maximum, and doesn't go off the rails, and we don't find anything that wasn't disclosed, we're going to fund your deal. No other lender does that because they have no confidence in their underwriting criteria, right?
Sure.
But we structure our stuff kind of like the military. Like in the military, you do objective-based planning, right? Typically, right? You don't go into a situation and say, well, I think we need to do, you have an idea of what your objective is, then you design a war package around whatever that objective is, and you typically will bring additional assets to the fight just in case something does not happen the way you want, right, in order for you to meet that objective. That's the same way we've designed the software is that you want to get to a loan decision, right? We know what the criteria is going to be necessary to get that loan decision. There's a credit issue, there's a background experience issue, and a cash to close. Those are the three things that keep a deal from happening. Failure to have cash to close, failure to have the experience, and really failure to understanding the actual project itself, like feasibility of it. Once you have those three objectives identified, then you have to say, okay, this person has X number percentage of this. What is missing out of this? You just present that to the client up front. Look, your credit's a 700, no issue, right? You've got experience, not a problem. You've got $100,000 and you need $150,000, so you're missing cash to close. You just tell them that. Now, unlike a lot of lenders that just do debt, we actually provide equity too. So now I'm able to give you a holistic picture. It's like, all right, you come on the platform, that scenario, you got your terms, you like it, you got a 700, you got the experience. Now you're $25,000, $50,000, $100,000 light on cash. Do you want me to go out and secure equity for you? Yes. All right. Here's a term sheet for equity. If we go out here and secure equity, this is what this investor is going to want. Are you okay with that? The difference between all the other people is that we, based on the underwriting criteria on the front end, we have service agreements with other lenders that we white label for and other capital providers and other investors that tell us, hey, look, as long as the investor or as long as the borrower or the guarantor qualifies between this and these things are met, we're more than willing to provide you the ability to give a conditional approval on equity or conditional approval on debt. So all we've done is put all that requirements in a large language model. So when you go through and you start typing out your application and you've got this, experience level, you've got this credit, we have APIs going on in the background, Gemini and some other different AI sources that are verifying all that. And then we get an underwriting report on our end that says, all right, well, Christian on title, because we have a title research tool, they have closed 7 deals. There's no outstanding liens or judgments against those deals. and he bought them from this and sold them for this. So he has a track record proving that he makes money. So his risk of us giving him capital is dwindled because out of the 7 deals, he's never lost money. He actually has an average revenue generation of $50,000 in his fix and flips or whatever. I don't need you to tell me that because I can go and pull that information. I have it before you do, right? So it really takes the credit risk off the table, which allows us to be very aggressive in saying, hey, we can approve you for this loan. Banks are not going to do that because they don't operate like that.
Sure, sure. And that actually leads to my next question. You mentioned that for your equity, you have partners that you white label for and kind of give you their criteria. For the debt, is it the same thing? Do you have in-house funds that you lend from, or do you have outside investors that you go to when a loan does get approved with the debt?
Both. Great question. I'm going to tell you something that I don't want this secret to get out, but I guess it will. On our AI system, we have what's called sentiment and contextual analysis. We're able to look at, and it changes as the market condition changes. Like the Fed will come out for interest rates, and it also publishes reports on foreclosures and defaults and stuff like that. So our algorithm is continuously updating itself and changing. Our underwriting criteria is kind of the criteria of the hour or the day. It changes as things happen in the market, right? And because of that, our algorithm will tell us, hey, look, this is a whatever probability, and off our balance sheet, we'll loan funding. But then if it's not a perfect, what we consider a perfect fit for whatever reason that day, then we'll say, hey, look, we've got 9 other partners or 3 other partners, or this firm right here that we have what we call LSA, lending service agreement with. This is what they do. We've got a partner on our platform. All they do is debt service coverage ratio loans, right? That's perfect. We do them, but that's not our sweet spot. That's not our bread and butter. We're a bridge lender. We like to make a significant good return for our investment portfolio on a short term, get that money back and re-lend it out like a revolving door type thing, right? So we have LSAs in place with DSCR lenders because it's a natural maturation. We get you in on a bridge loan. Once you hit the criteria that you state in your project performance, the algorithm already is set there to measure that. Once it hits, we send that file off to one of our partners and says, hey, I've got Christian here. We've got a 12-month bridge, but he's at month 9. He's already hit a 1.25 DSCR. I've got him at 12% for a 12-month bridge loan with no PPP. Would you like to refi him out? We'll get a 1% or whatever our agreement is referral to you. Take him out, give me an approval. I'll send that to Christian. Say, hey, Christian, I've got a great deal for you. How about your next loan payment next month is half of what it is today? It's 7% instead of 12. And oh, by the way, you're not just going to be making interest only. It's principal and interest, so you can actually start owning the asset instead of leasing it. 95% of the time when we make those decisions and calls to clients, they're okay with us making that call for them, right? And because we have access to that data, we're able to facilitate that in real time. Does that make sense?
Yeah, that does, and that's awesome. I mean, it's dependent on the deal, like you said, but one thing leads to another, essentially, right? The bridge leads to the um, long term debt. So, with that said, what do you see in the marketplace, right? Let's, I guess, switch hats from the lending to, what deals are you underwriting these days, right? What are people coming to you with? What types of things are moving, what's performing, what's not performing, especially with today, the last 5 or 6 years, rates have been here, went
Right.
here, and are now like here. So kind of what does that timeline look like on your end as far as the deal sourcing?
Yeah, we get everything. But I will tell you, as of recent, we've gotten a lot of people who are in that. The mark, the market's gonna be fine, right? But a lot of people are scared right now, so you got a lot of people that are trying to do a lot of cash out. Especially the more savvy and experienced investors, we're seeing them really step up on refinancing their portfolio to a lower interest rate because of some of the stuff you mentioned, but really liquidating some of the equity they have in deals, not because they're scared, but when there's trouble in the market, when Iran or diesel goes up to $5 a gallon or whatever, the unfortunate situation about that is that America is a paycheck to paycheck society, and it's a rental. It's slowly becoming a bedroom or rental community because housing is unaffordable where it's at. And the people who understand that are cashing out and getting a hold of every dollar possible because there's going to be a correction at some point, which is going to facilitate being able to buy property at a discount and a premium, right? So you got a lot of people right now that are getting their portfolios together, getting cash available, and putting that cadence together to be able to do that. We're getting a lot of calls of, "Hey, Rob, I'm not ready right now, but in the next 6 to 8 months, I want to make sure I'm good and I want to be able to do this. Can you help, give me a quote?" And what we've done is we've opened up our AI tool to anybody that wants to go out and get a quote. You can get a quote 24 hours, 7 hours a day. And the cool thing about it, we've evolved that into not just being a quote. If for some reason you want to pull the trigger on that, you have a certain amount of time to go back in your email and click, submit a loan request off of this. So you don't have to re-enter the information. It's right there in the system. They got a quote. Maybe, they were in a backup offer situation. Their offer was accepted. Now they got to move really, really quickly. So now they save time. They say, submit an actual loan request now, and then they can just go through the system, and it just takes off from there, right? Christian, our thing is different. We want to provide utility and value. So unlike a lot of lenders out there, I don't charge you anything to kick around the software. I don't charge you a SaaS fee. I don't charge you these junk ass bullshit fees of all this and that. Our pricing is right on our website. It's very straightforward. We don't deal with brokers. We are a direct to client interface. The reason why we can do that is our AI works directly with you. You get an AI assistant that learns you and your portfolio. You're not having to deal with a broker that's lying to you or bullshitting or taking funds for you, or, it's your direct client interface when you engage with us, right? Which is totally different than 95% of all hard money lenders. We have an affiliate program, which allows Christian or someone who's an influencer or a guy that has a W-2 job, and somebody says, "Hey, do you know a reliable guy that can lend me money?" Yeah, here's my affiliate link. You refer that person, they go through the process. You get 20% of whatever the fees are associated with that deal, right? Again, that's all on our website, so if anybody wants to know our fee policies there. But what that does is it removes a lot of bullshit out of the system, right? When we have real-time AML and KYC, myself, you, my tech guys, we all have to go through continuous monitoring, underwriting. So there's no "Oh my God, where's my money going?" Right? Or where's my deal at? You have continual transparency from the time you access our system to the time you get funded, right? There's no peeking around the corner. Where did my deal go? How come I didn't get approved? Whatever. You're constantly being updated. When you come into the system, you submit a loan application. You get a confirmation of that. When that deal moves from received to conditional approval, you get email, SMS, WhatsApp notification of that. If there are outstanding derelict items, our AI assistant reached out and says, "Christian, we weren't able to pull in your last Plaid statement from Bank of America. Can you send us a copy of your current bank statement or give us access to pull it from Plaid?" Because we have Plaid integration. So what we've done is we've taken a system now that typically is 30 to 40 pieces of PDF paperwork, which most people don't have readily available. And with 4 or 5 clicks and integrations of 3 or 4 different APIs, I can get a 95% conditional approval where the only thing you have to do is just accept terms, pay for your appraisal, and wait 7 to 10 days, and you close your deal. People think it's bullshit, but realistically it's not, right? What it is it's efficiency, right? So for us, Christian, we have a very straightforward process, man. I'll tell you what it is. You come on, you submit an application, you like the terms, you accept it. We charge a $250 application fee. That covers your background, credit, and legal lien search. That's done in real-time API, right? That just covers costs. It cost me $229. I make $21 off. That's it, right? Then if you move forward with that, we charge a flat fee. Commercial appraisal for anything less than $1 million is $3,000. Anything more than $1 million is $10,000. We've gotten a lot of consternation with that as of late. Some people want to defer an appraisal. They don't, they've got an appraisal that they've been shopped around, all this kind of stuff. We have everything automated in our system. We don't accept third-party title, third-party appraisal. We just don't. For whatever reason, if your deal is so great and you had this evaluation that was done the right way, it should have closed with other lenders. So I'm not really interested in taking somebody else's garbage. And I hate to say that, but
Sure.
We've had a couple issues of title fraud try to come, and we have anti-tamper OCR readers and stuff like that. So we're very good at being able to pick that stuff up like instantly. So we don't accept that. So client comes in, they want an $800,000 DSCR loan or $800,000 bridge loan. It's $3,250. They pay that at time of application because we order your appraisal, we order title, we draft the legal documents. That's the cost, right? You decide to not move forward with the deal. Rob's still stuck with that bill because it's fee for service. That has been the issue we've had so far with people is that they look at it as an upfront fee. It's not an upfront fee. I'm just covering costs. I'm not making money off of that, right? And I want to be very clear, like, you know, but also if I get 100 loan applications a month, right, and I pay $3,000, $2,500 for each person's appraisal, and only 10 of those 100 close, I still have to pay for
Yeah.
those costs, right? Those
It's a
are,
huge expense.
I mean, so it just, so we that's probably been the most challenging thing. Other than that, to be transparent, we have about 125 Google Trustpilot reviews. They're all 5 stars. I think there's one maybe 4 star or something on there. So we try to protect the brand. But since we went into production, we've done 180, almost 190 loans, roughly about $82 million over the last year and a half. Got about a 97% success rate. I want to get that closer to 100 as best as possible, but I also we're building out a stable coin internally, so we're going to allow same-day settlement utilizing crypto.
Hmm.
So that will happen towards the end of the year, where a client can actually come on, depending on the asset. We call it in by 9, out by 5 funding, where a client can come in, we have visibility into title, we have visibility into the appraisal, and we can do stable coin settlement, which allows them to transfer funds the same day or instantly with crypto lending and stuff like that.
Got it. That's awesome. I mean, again, how you're using technology throughout the process to make everything seamless, right? I have history in the real estate business myself, and I know how frustrated and stressed everyone gets when they buy a house. They have to go through the lending process, all that information, all that back and forth, and this really just makes it so much easier for both parties. And with that said, just switching gears a little bit, I did see you also do work with veteran-owned businesses and things like that, aside from just real estate financing. Is there a bridge there, or are they two separate divisions? Can you talk a little bit about what you do for the veteran-owned businesses?
Oh yeah, Christian, great segue. So just in general, and I'll get into the veterans, but in general, we pulled some data about 14 months ago and found out that the biggest issue we were having at that time was cash to close. So I hooked up with 4 of the largest business lines of credit, business term loan providers that provide like white label technology for us to actually lend capital off their balance sheet for qualified small businesses. So now when a client comes on, they're $50,000 to $100,000 short of cash to close, we can actually do a business line of credit, business term loan. We use them both in tandem. Because we already have their data, we're able to get an approval on the business line of credit side and the real estate simultaneously, should they want that, right? And that's going to allow, and that actually happened, believe it or not, for the first time. We had that. We've had people come on and get business loans. And we've had people come on and get real estate loans. We even though this thing's been available for a while, we had our first successful transaction about a month and a half ago, where we had a client come in. They were doing a fix and flip down in Florida. We're about $55,000 short on capital for the essentially the cash to close for the construction, and then utilizing the business line of credit side of the house, we were able to come in there and provide them a term loan to get them that bridge financing they needed to close that deal, right? So
Hmm.
on the veteran side of the house, I mean, what we just did at the Edge Conference 2026, we're working with 2 firms right now. They're real estate investment firms, and we've discounted our cost of money to them, and allowing them. I've actually lowered the credit requirements for one individual based on where they're at, to give them the opportunity to get into real estate investment, right? And we're going to work with our vets to ensure they're successful by partnering with them, either providing them equity or providing them low cost of capital, or structuring the financial deal where it makes sense for them on for their business. But veteran-owned businesses is near and dear to my heart. And the problem that we have always faced as veteran-owned companies is that a lot of people look at small businesses as, just needing a handout. 99% of all the vet-owned businesses I've ever met, and I probably would say 100%, I don't think I've ever met anybody, they're not really looking at a handout, man. They're just looking for a hand up, a leg up to be able to get to the fight, right? And then once they get to the fight, typically, 100% of them figure it out. The problem is that it's very hard to get off the ground when you don't at least have that small little seed capital infusion. So what we've done is we found several different small community credit banks and grant programs around the country that on case-by-case basis provide, 10, 15, $25,000 grant opportunities for veteran-owned businesses that don't have to be paid back. We're really excited because we met with a young lady that owns a bank out at Edge 2026, and I have a scheduled conversation with them to figure out some SBA products that we can actually white label internally on the platform that not only provides liquidity for veterans in their micro stages, but also allows larger lines of credit for some of our integrators that support our warfighters, right? Some of the DoD contractors and stuff like that. So more to follow on that. We're building that out. But that's a ministry of mine personally that I'm really looking forward to doing and reaching out. Keep in mind, our business lines of credit and business term loans is not really our primary business, but it is something that since we've gotten into it, we really see it as a critical need, almost a yin and yang, because what we found out is a lot of our folks, especially veteran-owned companies that are involved in real estate, 90%, 95% of their cash, their equity, their capital is tied up in the asset, right? It's tied up actually in the thing in which they're trying to take care of, the building or the property or whatever. And this capital infusion sometimes is kind of the bridge that gets them over the hump or allows them to maintain operations. So, that's something I never thought that would be, where we're at on this venture, this journey. But that is something that's very near and dear to me that we're going to put a solution together for. And there's a couple different ways we're doing it, but we're evaluating the data to kind of put a program together to be more proactive in supporting veteran-owned businesses. But it's definitely something we are actively engaged with at any level of veteran-owned business ownership.
Sure. Yeah. I mean, a couple of things stood out to me there. And in addition to, a lot of their funds being locked up, like you said, another place that some people's funds might be locked up is something like a TSP or an account or another asset to where they just can't access it for what they're looking to use or what they're looking to access it for, right? Where
Sure.
they have the money, but it's not available to them. And so, Rob, I heard you mention that when, people have their funds locked up inside of their asset that they can't access and they come to you, they have it, and also things like their TSP or people have it in their retirement accounts, especially veterans as well, but they can't access it for something like
Sure.
a business loan or a real estate purchase. That
Sure.
brings the question of, partnership and how important that is throughout the process and throughout everything that you've expressed to me. You're really a partner on the other end, right? You're not just a lender. You're not just access to money, right? You partner with people and you really kind of fill those gaps that they're missing. If it's money, if it's cash to close, if there's a credit issue, you help them solve those problems. So talk about the importance of partnership in real estate specifically, but even just generally in business overall.
Yeah, Christian, and that's a great point. Partnership is key to us. Believe it or not, I've had people come to me and say, you get paid to lend money. I don't get paid to lend money. I get paid to actually assess risk and make sure that the money that I'm lending comes back to me because I'm a balance sheet lender. So I don't sell off our paper to a broker dealer or a secondary market. And what that means is I'm making an investment in you, right? The guarantor, not your dream, not your business. I'm making an investment in you. It means it is 100% a partnership, right? I spend more time pulling people off of the roof than I do actually closing deals. 95% of what I do, Christian, believe it or not, is hey, I think we need to take a look at this different. The way this is structured is not going to work for you, because there's two things that we try not to be. We don't want to be like the other guy. We also don't want to be accused of what's called loan to own. A lot of lenders out there get a bad name because we have access to unlimited data. I wouldn't say the FBI or anything like that, or NSA, because I don't want to ever, be quoted to that. But I got access to a lot of stuff, right? Trends are trends. You can say whatever you want. You can argue with it. That's fine. But historical 50, 60, 70 years worth of data is what it is, right? And we only get paid when what you want to do turns out the way you want, especially in a bridge situation. So if you think about it, and I'm just going to tell you how this partnership works in our mind and how we do it. Our money and the money we're providing you is your money. You're going to fully guarantee anything that you do. So that's going to be your house, car, boat, whatever. We're going to be making an investment at some calculated risk of what you want to do. I don't know what you want to do, right? I'm not you. However, if you're not successful, if we don't protect you, your mental health, and your mission, well, I know what's going to happen. We're going to lose, and you're going to be upset with me, and whatever happens after that. So we want to avoid that. So what we do is we take a look at your plan. We say, Christian, this is great. However, based on what you presented here, this does not meet the SBA or the FHA underwriting guidelines for that refinance you're looking at in 14 months that you're going to pay us back. So what's your secondary option here? What is your alternative here? And 95% of the time, people come to me and say, Rob, I don't have that. This is my only thing out. So that's when the partnership happens. Say, hey, look, I think what you have here is good, right? Are you open to us having a collaborative conversation on this DSCR takeout that you're looking at? Because the way it's structured is not going to work, right? And nobody takes that time to help these people, right? Nobody does that. So the partnership is more advisory. The technology, and that kind of gets into the last portion of what we do. The technology allows me not to bullshit people and say, okay, there's a deal here or not. And then the humanistic of Rob and what my firm does really gets involved, because now we have a full, frank, open moment conversation of, hey, this is what the data says. I understand what you're trying to get to. This is why this will or will not work, but you still can get what you want. You're just going to have to restructure it, which 99% of the time, even the most seasoned, savvy folks don't see that. I see it when you're taking your sixth and seventh, when you're taking your first and second step. I'm already on step number 6 and 7 based on data and based on me talking to you. And that sometimes it's hard for people to kind of get to, but we see a lot of B-backs. We call it the B-back bus. 95% of the people that say we're too expensive or I can get a better deal somewhere else, about 9 out of 10 come back. Like they just do. And I'm dealing with one right now. It's got to close by next Friday. It's a $3 million acquisition of a hotel in Sparta, North Carolina. Talked to a lady October 24th of last year, gave her a term sheet. She got taken down through there, spent $60,000 unnecessarily underwriting costs, and is going to lose $155,000 in escrow if we can't close in a week. And the deal she got then is the deal she's getting now. In fact, she's getting a better deal now because her interest rates have gone down.
Yeah.
So we don't take advantage of people. And her first call when she called me was, Rob, I'm sorry. I should have listened to you. But I know you're the only one that can close in this time because of, we have access to the data. And I'm not trying to be an egotistical asshole or narcissistic, right? It's just that some people believe you when you talk with them, and some people got to get taken down through there and get shown that, right? And I'd rather avoid that and just say, hey, here, this is what we can do for you if it works. Some people take it, some people don't. But, Christian, again, to be 100% 100 with you, we're going to do what we're going to do, right? And we're going to take care of people. Now, if I was an asshole or some of these other loan sharks out here, I would hit this woman at 15%, 6 points, $10,000 upfront charge, all this crazy stuff you hear about, right? Didn't do that at all. In fact, the lady's supposed to pay her appraisal fee. She still hasn't paid. We went ahead and poured the appraisal anyway because we don't have time. We just don't, we don't have time to, waste. So I'm going out on faith thinking that she also doesn't have another option. So I'm trying to help the woman, right? So there's there's too much AI, right? So I don't want everybody to think that we're just an AI company where we don't give a shit about people. We do. We care about the veteran. We care about the single mom that's trying to do the fix and flip. Whatever your situation is, right? Our software is adaptable and wants to get you through that, right? Once we get through the black and white, let's have a real conversation. Okay, so if I could take 2 minutes on this situation, and I'd be more than happy to refer you to this lady because I think it would be good for you to kind of verify what I'm saying. But we have a standard like underwriting criteria of loan to value and risk and all that kind of stuff. Well, we went ahead and did an underwriting of that in real time for this deal. But what we found out was based on her pro forma, her takeout of where she believes that is going to be achievable, we did a stress test on that. Fact of the matter is that it doesn't meet the criteria in which she's trying to get to. So she's looking at an SBA takeout on this deal, which it qualifies for, up to $5.5 million. I think they'll do 85% loan to value based on net operating income and some other requirements. We have all that stuff, right? The problem is that our debt servicing at this level at 12%, which is typical for this asset, is actually a really good deal for this asset, believe it or not, because there's no prepayment penalty. She gets the takeout loan. She just calls us, get a payoff. She pays us back. So there's no PPP, all that kind of stuff. The issue is that the current NOI and then her proposed NOI, even at giving her 1-for-1 of what she thinks is going to be, still doesn't service the debt. So our AI came back in there and said, hey, look, this lady's break-even point is at 14 months based on her pro forma and her schedule. But then even with that, she's still not going to be able to hit that number at 12%. So we had to reduce our interest rate at 10.25% in order to hit our metrics to make sure she's successful. Now, you're probably saying, oh, that's a lot of numbers and all this and that. What it comes down to is that I can be an asshole and charge this woman 12 points and be really, really greedy on the front end, but I'm also going to own this damn hotel in Sparta, North Carolina, which I don't want to. Because at 12%, she's got a negative NOI, which makes her an auto decline for the SBA. So why am I telling you that? When you say partnership, right, it's kind of like clearing, a building, right, in the military, right, clearing a structure or an object. If you don't check the left or right when you get ready to do CQB and you get ready to take a room or take a hallway, you're gonna get your ass shot off, right? And if you don't have access to clear, verified data, you're gonna get your ass shot off, right? And you may think that you're getting paid now, but at the end of the day, you're just going to foreclosure, and you better have a good legal team because you're getting ready to have to sell this thing, right? We want to avoid that. So what we ended up doing on this deal is I gave her a 10.25% interest rate, which is a fucking song compared to what this thing is, all right? And then we cut our origination points down to 2.5% to give her the financial wherewithal she's going to need in order to meet the requirements based on her, thought of how she's going to do a refinance or whatever, right? And that's the future of direct lending, right? Is not to underwrite for here and now and make as much money as possible off of Christian. Yeah. It's that realistically, how do I get paid back? And then more importantly, if this thing goes south, who's going to buy this paper off of Rob, right? Who's, what is going to be attractive to that, that note buyer or whatever, in case it does go south. And our algorithms allow us to have that conversation in real time without even having to have the conversation. It just comes back and says, hey, look, based on historicals and based on what this is and what they're trying to achieve, this is not going to work. Sure. And the client, and here's the thing about that, Christian. You know how much that costs that client? It's part of underwriting up in the front because we do all our underwriting up front. This is before she submitted shit. This is just, let's have a conversation and put your 18 questions in the system and let's just get a bird's eye view of what we're looking at, right? And now that client, you've built that trust up with them, right? Remember, this woman has been taken down through there. 60 grand. Somebody scammed and conned her. And I've taken an hour out of my time, 30 minutes out of our time with data and shown her, hey, this can be done, but this is what we have to do. And the only way we were able to do that is the system, right? The access. So the partnership is collaborative between the human side of it, of us, what we're doing, but also taking the bullshit out of it and taking the emotion out of it and just say, hey, here's the numbers. Does this make sense for you? Because honestly, her business partner that was on the call was not feeling it. Because she's a numbers lady. The business part was a numbers lady. You have the dreamer and then you have the anchor. We always call it the dreamer and the anchor when you have a partnership. The guy that wants to get the thing done and the guy that says no to everything. That's always makes it. It's kind of like a husband and wife thing. I'll let you figure out. I don't want to be sexist. You tell me who's who. But anyway, she came back to us and said, and I got a text message from the finance, the CFO, and she said, Rob, I really appreciate you taking time because I've been telling her that for months. And the fact that you're even saying that, you're betting against your own stuff, right? You're telling us the truth because I'd rather you come to us and we say no on this one and the next one, right? As a partnership, we hit it out of the park and everybody's happy.
Yeah.
That's so to go to that level. I know that was we went all the way around the woods, bear shitting in the woods to get there, but that really to be just to be honest with you, that's how we structure these deals, man. It's not just putting somebody in a funnel and blowing them out. Really thinking through these things pragmatically.
Yeah, and at the end of the day, it's simple. You have to forecast, and you have to look both ways before you cross the street. That's what we're doing. That's what we're doing here. X's and O's.
That's it.
Awesome. So let's go back real quick to CREquity. What are you focused on now as far as like the next 6 to 12 months? Are you growing this thing? What are some challenges you're facing? Some roadblocks? Like, what's the next step for you?
Because of what has happened in the market, Christian, we are on the hunt for capital. Our pipeline right now has increased to north of 2.5 billion. About 60% of those are vetted deals. Some of them will not be in the pipe by the time we get the capital. But the way our funnel works, it just goes out and grabs opportunities. So we're at that situation now where we've got to really get with an institution that wants to make wants to have a serious conversation about, deploying capital, right? There's a great opportunity out there if you do it prudently. So the biggest challenge for us is that we only have a $250 million balance sheet. And I know that's a lot, but it's not. You think of it like this right here. If we do one loan a day at $800,000, we'll give out the money in month 7 actually, with reserves. So that's not a lot of capital when what we're doing. So that I would love to be able to insource the 32 direct private money lenders we have on, which with that throughput would be another $140 million of revolving capital. And we're working on that, but our biggest impediment is really having deployment of capital. You got to remember, we're the smart kid that nobody knows. Up until about 2 months ago, you couldn't go and search Google and find CREquity. And in fact, I don't even think we're on the first page yet. I think we're still kicking around second or third page, local level, right? So, and I did that by design. You don't want to. We don't pay for Google ads. I don't believe in that. If people want to find you, they want to do business with you, they'll call you. Right. The reason why you and I have gotten knocked off this call 4 times is that my phone hasn't stopped ringing, unfortunately, with deals that people are rating, and I can show it to you on the screen here. It's just, I'm scared, to be honest with you. I am scared shitless. Not even lying to you right now. Because I don't have enough capital service people. That's really the challenge. Is that I know the system works. I've got the metrics. The system works. We became an Inc. 5000 out of nowhere because the system works. We became a Veteran 100 company because the system works. The system works a little bit too good sometimes. And the only reason why I'm able to even have this breathing room to talk to you for an hour is I haven't advertised. I haven't marketed, right? My social media sucks. But I'm still getting calls at 12 o'clock at night to save people. And that's great, right? But you got to have capital to do that. And that really that's a challenge right now that we've got to solve internally. So.
Got it. So is that what I'm hearing is that's the next focus, to get in front of the capital more so than the demand side of things?
The demand is there, my friend.
Yeah.
If I showed you 30 seconds of how we go out and grab leads, and how we can underwrite them and issue paper, and how seamless that is, you would leave what you're doing right now and come work for me, because I would keep you gainfully employed for the rest of your life. We operate off of opportunities where people don't look, because there are. Not to tell a lot of secret sauce, but we have an AI agent that proactively goes out, searches for mature refinances. That queue is north of $300 million right now. And those are just meat and potatoes, right? It's very easy. If somebody's paying 10, 9, 10, 11, 12, 14%, you're able to send them a text message. Hey, click here, AI automated, save 7% a month, 1% origination refinance fee, 30-year DSCR fixed. I mean, it's unlimited. No, everybody's
Yeah.
taking that. Everybody's taking that deal, and we do that.
Yeah.
You know what I'm saying? So we can't do that right now to the level I want because we don't have capital. We would run out of capital tomorrow. If we did that right now, like for example, I pulled a list out of a certain area in the Northeast that was affected by a appraisal fraud situation where houses are overvaluated and loans are out. There's a lot of people that are hurting in Baltimore and Philadelphia. About 4,000 of them are eligible based on our criteria right now. I can make 400 phone calls. I probably get 300 loan applications in an hour. Our AI assistant can make 1,800 contacts an hour via text, phone calls, and whatever not. So,
Yeah.
it's just access to capital.
Awesome. Well, I mean, with that said, it's perfect segment here to end things off. Let's say somebody's watching this, they have capital to deploy. What's the best way to get in touch with you? Where can they find you? Where can they reach out and learn more about what you're doing?
Well, the first thing we're going to do is after this call, we're going to congratulate you and thank you because we're going to welcome you into our super affiliate program. And if anybody wants to make contact with us, they should come through your show, and you will get a commission for that. But to answer your question, not to be evasive, I can be reached at Rob at CREquity.ai, and we receive phone calls, texts, or WhatsApps at 949-328-6622, 949-328-6622. Just tell them that, mention that they got referred through you or whatever else, and we'll give them a discount, and you also get credit for it. But I mean that we're very easy, very accessible, Christian. Very, very, very easy. We will take a look at any asset that is a non-primary residence. So if it's an investment property, non-owner occupied, non-qualifying mortgage, which is FHA, VA, none of those, then we'll take a look at it.
Awesome. Love it, Rob. Thank you for joining us here, coming on the show. Really enjoyed our conversation. I really look forward to watching you guys grow over, the next years to come and see where you are, at our next episode.
Thanks, Christian. Appreciate it, brother.